Hello traders, it's me Lato Magar. Welcome to my YouTube channel. Today I'm going to be speaking about XAU USD and I'm going to be talking about the COT data, which is commitment of traders. Okay, it may be useful for you to trade in the future. Before jumping into those two topics, I would like to reiterate about the US dollar. Okay, um, the US dollar, it seems like it is going bullish. Okay, it may be very strong in due course. At the same time, Japanese yen is also correlated to US dollar, so it may shine as well. And obviously there are a number of reasons why it may happen. Okay, number one is like the US President elect Biden's 1.9 trillion stimulus plan appear to be the primary wing factors. Okay, and the other one is the equities. So equities mostly fall this past week with a few key exceptions on Wall Street, like the S&P 500, FTSE 100, DAX 30, Nikkei 225. Okay, so number of percentage sank last week or past weeks. So basically what happens is the big investors, institutional people, hedge fund, whenever they pull out their money from the stock, then obviously they go with the US dollar. That is why the US dollar will become strong. And at the same time, talking about the gold here, so you can see the anti-fiat gold prices dropped roughly 1%. Okay, why? Because whenever they go with the US dollar, then obviously the gold drops. Okay, that's what happened. So we have to be aware of those news or fundamental analysis. Okay, ladies and gents. Right. Let's go and break down gold from the monthly perspective view. So what we can see from the monthly time frame. Right. So if you're gonna have a look on the monthly, okay, let's go to a line chart. Okay, draw a trend line. Okay, from there, here you go. So again, it should be better if you can have maximum touches. Okay, here you go. Right, what we can see here, the market, you can see that it has the trend line has respected here and went up, came back down and respected. Okay, and here you can see another one, and here you can see, and lastly you can see here. So from the technical side of view, what I can see is it has already found the level of support. So from here the market should reject towards the upside. Okay, so let's delete this one and then go back to line chart, candlestick chart. Right. Okay, what we can see here is that impulse is very strong impulse. Okay, that one there, and here you can see that was the exhaustion phase or correction, and next one supposed to be continuation, but that did not happen. Okay, instead that you can see four consecutive months and the market was rejected. Okay, so if you're going to use your Fibonacci tool, what you can see here, okay, use the Fibonacci tool from the bottom to the top. Okay, so here you can see market came and tested 50% level there and went back up. Okay, So if you're gonna take this one as an impulse, and that was the correction, next should be continuation. Okay, so it has already respected 50%. So from that view, I can see that it should be going up. Okay, so let's go and have a look on the weekly chart, what we can see. So again, from the monthly, my personal directional bias is bullish. Okay, it should be going up. So let's talk about on the weekly chart. Right, weekly chart, here you can see there the previous high. Okay, market came back down and went back up. Okay, here you can see the small red candles there. Okay, market was trying to hold the market there. Okay, but it did not happen. Okay, it did not happen. So obviously that candle over there, you can see that that was able to break that level. Okay, and then closed above the strong support zone. Then the next candle went up to like 100%, almost 100%, and then melted down. Okay, so at that time it was able to break that level again. So that was the previous support. That candle broke that level, and then closed below there. Okay, next candle again you can see here. So from here, what I can see is if we're gonna use my Fibonacci tool, I'm gonna take this as an impulse, and that is the correction. So now the next move should be continuation. Okay, so let me delete that and use the Fibonacci tool. So if you're gonna use the Fibonacci tool, okay, from the bottom up to the top over there. So what you can see is market was rejected from 0.786. Okay, that is this week. It is still being rejected, but it should be able to go up. Okay, that is my directional bias from the weekly chart. Okay, so if you're gonna have a look on the daily chart, what you can see, so that is the impulse, quite a strong impulse. Here you can see, and would have been better if it was retrace back at least 0.618 or 50%, but that did not happen. Instead, market melted down. Okay, from there. So you can see, right. So you can see here the 4 consecutive days of the rejection. Okay, strong rejection there. And here you can see the red candle, it was rejected below the strong support zone. So from here, what I can see is here you can see a small green candle with the long wick. So it looks like the market will reject from that area because of strong support now turn to resistance, and market should be rejected from that area, and obviously it will be able to fill in that wick. Okay, that area. So let's go and have a look from the COT data. Okay, what we can see there. Right. Okay, commitment of traders. Okay, if you are looking for commitment of traders, obviously you have to go to the cftc.gov website. Okay, so you must be wondering about the code data. Okay, if you are new, obviously what is code COT data? Okay, the commitment of traders, or COT, is a weekly report released by the Commodity Futures Trading Commission, CFTC, which is this one there. Okay, and the COT report outlines how different types of traders are positioned in the futures market. Okay, so guys, we as a retail trader, we are very lucky, so we don't need to report to CFTC. Okay, so we can go for many positions, whether you want to go for long or you want to go for short, you can go anywhere, so you don't have to report to CFTC. But those people, like big investors, like hedge fund, institutional traders, whenever they want to go long or short, they have to report to the CFTC. Okay, so basically what they do is like, they report their positions on Tuesday, and after a couple of days, the CFTC, which is Commodity Futures Trading Commission, they will release that to the public on Friday. So you might be wondering, no, they go like, before like a couple of days, then how could it be possible to help our trade? So in a way, like, they are not looking for only like short opportunity, like scalping, intraday kind of thing. So they actually drive the market, okay, in the long run. So that definitely helps us, guys. Okay, so I'm going to show you where to find out those code data. Okay, so go to cftc.gov and then go here, market data economic analysis. Okay, and here you can see commitments of traders. Click on there. Okay, if you're going to scroll down, okay, you can see here reports dated January 12, which is 12 was the Tuesday last week. Okay, that was the report, but they released on Friday last week. Okay, so there you can see current legacy reports. Okay, so our interest is only with Chicago, not board one, the Chicago Mercantile Exchange. Okay, so we are not interested in long format, so we're gonna go to short format. Okay, click on short format. Okay, that will take you there. Okay, here you can see butter, milk. If you're gonna scroll down, you can see okay, so Russian ruble, okay, Canadian dollar, Swiss franc, those currencies can be found here. Okay, today obviously I'm going to go with the gold, okay, XAU USD. So I have to go to the commodities. Okay, so if you are looking for commodities, here you can see, so Commodity Exchange Incorporated. Okay, again, I'm not interested with the long format, I'm gonna go with the short format. Okay, click on short format. Okay, that will take you there. So here you can see silver, copper, gold. Okay, we are interested in gold here now. Okay, because I'm doing the analysis on gold, that's why I'm gonna go there and check. Okay, so talking about those things there, that is the non-commercial one. Okay, that is the related information only from non-commercial. We are not interested in commercial or any other thing here. Okay, so only non-commercial one. Why? Because we are interested in people like hedge fund, institutional, traders, those people. Okay, so we are only interested with non-commercial. So here you can see long, short. Okay, so we are not interested in spreads. Okay, just ignore it. So underneath the long, what you can see here, that is the positions. Okay, that is the position, guys. Okay, that's for long and that is for short. So the people have gone 313,217 position on long and 66,990 positions on short. Okay, I think you have got it. Okay, so that is the total positions. Okay, with for gold versus like US dollar. Okay, so changes from the last week. Here you can see changes from the last week, means the 0.5, that was the previous Tuesday. Okay, from that they changed some positions last week. Okay, what they have changed then? Okay, here you see. Okay, 36,729. So they have closed 36,729 position from the long side. Okay, and at the same time they have closed 3,638 positions from the short. Okay, so what can you see from here then? You can see that the investors or the hedge fund institutional people, they are not interested in going long or short. Okay, both of them, and both of them are closing both. That means they are not interested in gold, and they may be interested in others. Okay, so last week what happened? If you're gonna go on the chart here, what you can see, basically what happened with the market. Okay, whenever they want to drive the market up, at that time they go for long. Okay, long. At that time they are not interested in short. Okay, so because of you can see that big drop there. At that time what they do is they don't close any longing. Okay, at the same time they started to put for short, so they started to go short. Okay, so they don't they don't close any position for long, but they they add more for short. That's what they do. Whenever you see when they are not closing their long, but they are adding shorts, they are adding shorts, then what happens? Market market crashes like that. Okay, so if I'm gonna show you the last 5 days, okay, last week, okay, from Monday to Friday. So that was the Monday's one. Okay, that is being created today's one. So let's talk about this one. 1, 2, 3, 4, 5 candles. So what you can see here, because I have already said that, because of when you look onto the data here, what you can see, because they are not interested in longing or shorting opportunity, hence why here you can see market, what happened, moved sideways. Okay, it is ranging, right? That is the reason why we have to look the data. Okay, whether they are going long or they are going short, then that will help us to identify where to go next. Okay, that will definitely help us, ladies and gents. Okay, right. Okay, let's talk about this then. I think yeah, if you did not get anything, please put the comment in the comment section below, so that next time I might make a video only for code data. Okay, so COT, commitment of traders. Okay, right. So I was here. So talking about the daily here, what we can see, okay, that was the accumulation phase. So market, I think the market will try to go back there, and then as soon as it finds the resistance, and it might reject from that place there. Okay, why? Because of the fundamental reasons I have already mentioned about US dollar. Okay, but my bias for monthly and weekly is long. Okay, so talking about the daily, what should I wait then? Okay, I'm gonna wait until the market breaks that level. Okay, that is the strong resistance. Okay, that was the strong support. It should be turned to resistance now, and should reject back, okay, to the downside. But when the market will penetrate that level over there and then closes above the resistance, then when it comes back to retest that level over there, then I might look for longing opportunity. Okay, that's what I will do in the future. Okay, that's what I'm gonna wait. But until then, I'm not really interested in going short from here. Okay, even though talking about the institutional people, they have closed so many positions last week. Maybe they may close more in due course, but I'm not interested in going short. But I'm going to wait until it breaks that level. Okay, as soon as that closes over that level, and it gets back there to retest that level, then I might look for longing opportunity when the environment shifted to the bullish side. Okay, so I think that is all from my side. You might have got something from me. If you did not get anything, just let me know in the comment section below, so that I can go more in detail. If you like my video, guys, please subscribe, like, and share it. Okay, whenever you share with the others or you like, then algorithm will spread my videos to the other viewers. And obviously I will have more videos in the future, so that you'll get notified. At the same time, you'll have a chance to learn something from me. Wish you good luck, guys. Okay, the market was very slow today because of the public holiday in the US. Obviously it should be volatile from tomorrow onwards. Wish you all the best. Stay safe. See you in the next video. Until then, peace.